9th of July. The 9th of July, we go back to support at 62.40. The 11th of July, 62.40. The 11th of July, late in the day, 62.40. The opening on the 14th, 62.40. Today, same thing, 62.40. That's intermediate support. 6,300 resistance, intermediate support at 62.40. 6,200 were the lows last week that we hit. Like right now, I think we're literally stuck in a 100-point range. And I think the resiliency is we got to hang on to these levels, because if we break below 62, there's room to fall to 6,000. There's room to fall to 5,800.
Right here,
So
you see that
yeah,
volume shelf right
yep.
there.
It's just that it's that big open space where it's like if we crack those floors, there's room to fall.
Yeah.
I did a little summary today. I used a little AI deep dive and just did some financial summaries on earnings transcripts and the calls from J.P. Morgan, Wells Fargo, Citigroup. Economic outlook is a little mixed. I mean, they're saying that the consumer is pretty resilient, but it's all about tariff uncertainty and geopolitics. So it's like as always is like things are okay. Our guidance is fine. We're making more money. But there's always that like uncertainty. The recession risks are down to 40% from like 50, 60% early this year. But what's going on with tariffs? That's what I want to ask you guys. Like, is Trump getting brave because we're at all-time highs again, so we can just start talking tariffs? Or it's like, I don't understand how we're just like, it seems like August 1 is going to be, the markets were ready for like a 10% blanket tariff. And what's August 1st going to look like? Is it going to be like we're doing blanket tariffs 20%? Or is it going to be like all individual, you're 30, you're 25, you're 50, whatever. I don't know, man. It's just this whole back into the tariff gray area of like nobody knows what's going to happen. It's annoying. And maybe that's all the market needs to kind of flush down a little bit.
Yeah, I don't know if anybody knows besides the people in the West Wing going on there, but
They don't know either.
I think
Trump doesn't know. That nobody knows.
Yeah.
I think I saw this article on CNBC talking about headline this morning about how Trump is not going to Trump says he's not going to chicken out. I think they literally said chicken out on the Euro tariffs. I was like, wow, you're really just maybe you want like, you start saying that he's not gonna he is going to not chicken out. He doesn't want people to be calling him a chicken. Like he got
Right.
so triggered by the taco.
Right.
I don't.
But what if what if something breaks? I mean, if
Well,
something breaks, it's like Trump is the first one to put in a Trump put. It's not Powell. It's not Xi Jinping. Like it's Trump. Like Trump was the put in April
yeah.
because the
Well,
bond market told him to.
Yeah.
it's wild because I think I mean, look how much we've gone up since the Trump put. So you would think you would have tolerance for a little bit of a downswing, even if the markets, don't like the tariffs. But I don't know, man. It's
I mean,
wild.
I think there has to be a downswing. But it's just so is it like flush lower, dead cat bounce, flush lower, and we kind of resettle into that like ceasefire agreement gap? Do we see the U.S. trying to trade agreement gap? Like that's what I'm saying. 6,000 to 5,800 for me is like a good equilibrium to kind of find some support. I think the market can claw back from there, but it's like we all know that if the market's going to pull back 5 or 10%, it's going to be littered with like terrible news. It's not going to be just like a smooth, just a little rollover. Oh, we'll just ease our way down for 3 to 4%. Like it's going to come in a nasty fashion. It's going to be riddled with Trump and tariffs, and it's just all the uncertainty that has to have the market panic for a week or two. So I just don't see it happening smoothly. And at the same time, and like if price doesn't want to break 62.40 or doesn't want to break 6,200, I'm exhausted trying to say I think we're gonna have a correction. I think we do have a correction, but it's like I'm literally saying from now until like the end of September or the middle of October, that's my correction window because I don't have to be spot on accurate with that. But it's like that's a big enough window that I think we get it based on seasonality. We've got the Fed on July 30th. We've got the tariff deadline on August 1st. We've got typically like top bottoms are pretty common in the markets in August, September effect in September. Like these things typically ventilate the market a little bit. And I think that's a pretty fair window to be like, yeah, I think we're gonna have a correction. I'm not gonna sit here and watch it every day and beg the market to go down when it's never fun to watch how the market goes down. Market goes down on just right now. It's like it's a news cycle that's so bad, and the whys that are attached to it are so bad, and everyone loses their mind for a couple of days.
Well, it was what was the inflation data was non-existent today, right? it was zero, literally nothing. What was
Yeah,
that?
magically it was zero, but the revisions were really high. The revisions were like 0.1 to 0.4. So they went up like 0.3%, and then it was a 0.1 to 0.3. So we went from the revisions are what I was concerned with. We revised from 0.1 to 0.3, from 0.1 to 0.4, and then the 0.2 forecast came in both at zero. I'm like, it's so hard to believe the data, honestly. Like, I just think that inflation's sticky. Bond yields aren't really budging. Fed's going to cut maybe once or twice this year. I mean, and can I ask you, if the Fed cuts, let's say right now the market's looking at about 50 basis points of cuts this year if they just do 25 and 25. I mean, I think Jerome Powell, honestly, like, is one of my favorite chairs in my career. Like, I came into trading around like the Bernanke time. It was like Greenspan, Bernanke when I started trading.
Yep.
Powell, I think because the Fed is forced to be so much more transparent now, it's a very difficult position. The bond market's going to tell us really what the market thinks of it. This go around, if we cut September, cut December, I mean, do you think that yields go higher on the 10-year, or do you think that we just kind of stay the same and stay sticky? We don't really have much of a fluctuation. I'm just curious, like, Fed cut or not cut, what matters? Like, what matters this year?
Yeah, I don't think the overall bond market really cares about the short end at the particular moment.
Yeah,
I
yeah.
think it I think there's bigger forces at play, and we can talk about exactly what those might be. But right now there is what we're struggling with right now is demand for US Treasuries. Like,
Mm-hmm.
is there appetite for it? And if I'm a fund manager and I'm looking at these treasuries, and even at a 4%, 5% yield, is that tempting to me? And institutionally, I am forced to have a certain percentage of my portfolio in bonds,
Mm-hmm.
whether those are, and some of them were dictated to have a certain percentage in specifically U.S. Treasuries.
Right.
So my hands are kind of tied right there, and I'm looking at this yield, and I'm going, the stock market last year performed over 20-30%. I see cryptos going crazy, and 40% of my portfolio is locked in these terrible, terrible yields.
Mm-hmm.
And then I keep getting blamed for not outperforming the S&P 500. What is that?
Right. Right.
So as a portfolio manager, I've got to be really, really frustrated, and I'm going to start demanding that those yields go up. Otherwise,
Right.
I'm going to underperform forever.
It's true. It's true. And as far as everyone hears, like, well, you could just do like a 4% risk free. It's like, what instruments are I'm like actively getting rid of my TLT exposure. If I wanted like a risk-free environment, I would trade BIL. That's like one ticker you can trade. A lot of brokers allow you to trade that. That essentially is like a
All
1
right,
to 3
what was that
month
ticker?
treasury mix. BIL. So that is a 1 to 3 year treasury mix that is fully liquid. So if you hold it for like a 30-day window, you're essentially like you're in at spot price and you're out at spot price. I think I've gotten in and out of this thing for like a plus or minus, 2 to 3 cents on the upside, minus 2 to 3 cents on the downside. So this is a way for me to get some yield on unallocated cash and do this in like 30 to 60-day cycles. So anytime I have cash on the sidelines, I'm usually parking some here, and then when I need it, I'll just pull it out. And if I sacrifice, whatever, it could be 10 to 100 bucks depending on the position size. But for the most part, I'm able to pull in some type of like 4+%. It'd be like if I did this every single month for an entire year, it'd yield about 4%, right around that, like
So you're
1 to 3.
basically getting the same yield, but just not locking up your money.
Exactly. And the reason I say that is because I look at TLT right now. TLT's is trading like dividend 3.9. Okay, well, it's down 3% for the year. So to hold TLT and to be down for the year and sit and say, well, I've got a dividend of risk free, it's like, but you're down. Bonds are still in a drawdown. It's been a 5-year drawdown in bonds. So it's if people are wondering, like, where do I put my money? I mean, if you're in a stock account, I'm putting in a BIL, not in TLT. TLT has too much more, like, there's still price sensitivity. And I would hope that if you look at a chart of TLT, Alex, and go back to like a monthly chart and zoom way out, we have lows back to 2002 that are in the low 80s. I'd love to say that that market can hold that low, but if we have a lot of bond drama in 2025 or 2026, something snaps in the bond market. Um, those lows aren't safe. And the last thing I want to do is be sitting in bonds thinking my portfolio is safe and watching an instrument drop another 5 or 10%. you know? So I'm just really cautious on how I'm playing bonds. I think BIL to me is a safer play.
That is pretty interesting. You can see where we are almost approaching those bottoms there. Huh.
Yeah.
Yeah, we got a lot of maturities happening in 2025. It'll be interesting what happens with that, because now the maturities that we're having, those are 10, 20, 30-year maturities. 10, 20, 30 years ago, US bonds were still AAA, AAA, AAA.
Yeah.
Now we're at AA, AA, AA. So how many institutions are no longer allowed to hold US treasuries? That's a question I don't know, but
that's
there's
why
got to be at least some of them.
That's why Trump is so adamant that they need to cut rates before all this start coming up for renewals, right?
Yeah.
Auction stuff.
And I mean, that's this big pocket is supposedly September onwards.
Yeah, I was gonna say, do we know when those? I know it's 2020, late 2025, early 2026, right?
Yeah,
Like,
from what I know, it's like September's like the big like liquidity air pockets, what's been labeled in September this year. So that just makes things like the outlook for 2025. I thought we'd have like a pretty resilient 2025 after we got through April, but now that we're stretching in, I mean, it's just me, or does it feel like the market has? It's almost like we've experienced one full year of trading in like six or 7 months.
oh, for sure.
You know, like we've packed in a lot of activity in these like 6-7 months of trading, because it's been basically a bear market, a COVID type price action to a crisis, to then the reflexive nature of the market to like can't stop, won't stop, melt up to all-time highs again. It's like it's just enough volatility to make traders lose their minds a little bit. So I don't know, man. I hate to say it, but it's like I'm wanting to see a pullback so I can position for wide margin for error income trades. I'm not going to buy the dip right away. If we pull back to like 6,000 or 5,800, I'm not buying the dip right away. I'll position for lows to be in, but I'm literally going to position a lot of my plays at, I'm just going to own things at the April lows. Like SPY, Qs, backup plan is I'll own the shares. I'll position so price has to come back to April lows before I'd have to take on any real risk. And I'm hedged all the way out to the end of the year in case things get really nasty. So I don't know, man. I just feel like today's one of those days where like I'm playing defense. I think if it was like less Trump and tariffs talk now, I wouldn't be having this conversation. But it's like here we are coming up to August 1st. The Trump chickens out thing, the taco trade maybe, but it's like I don't think he's going to pause. And I think if we come out with another blanket tariffs across the world and the world doesn't like it, then we're just going to go into another round of uncertainty and more like another round of higher VIX. And I don't know. Is anybody long VIX, by the way? You guys playing anything on the VIX in these next like maybe 30, 45 days?
Well, so later in this presentation, when I don't not doing it, but we are in a pretty compressed volatility environment right now.
Yeah.
I mean, VIX is. I don't really. Here we go. Let's pull it up.
I mean, we have higher lows. We have higher
trade.
lows on the VIX, but it like won't break. It won't break 15, and it won't really get above like 17 right now.
No.
I think that's got to crack pretty soon. The second you start seeing if you see pullback beyond 5%, for sure that's going to spike up. If you look up, Alex, real quick, the NAAIM Exposure Index. I don't know if you guys are familiar with this. Yeah, I don't know if you'll find it on TradingView. Just Google NAAIM Exposure Index.
Yep.
NAA. Sorry, I just sent all my windows. NAAIN exposure.
What does this mean, Kane?
It's the National Association of Investment Managers. So these are basically hedge fund managers or large institutional managers, and how exposed they are to the market. So you can see that 100 is about basically 100%, and it can get above 100% because you can also leverage yourself.
Correct.
So right now, what we saw is at the very end of June, we hit basically 100%. And then that started to come off. And then we're supposed to get another number today. If that other number goes even lower, then that starts to see anytime we peaked at 100, maybe it pulls back a little bit and then pops back up 100. And then you have this sell-off where institutional managers are actually selling off their exposure to the S&P 500. So if we see that number go down today, I think that's a very good indicator that we're going to finally get our pullback.
This is released every week, it looks like, right?
Every week, correct?
Yeah,
Yes.
Nice.
seven.
I would trust
like
this.
it.
I would trust this a lot more than the AAII sentiment, which has clearly been the worst. I mean, it's been the greatest contrarian reading in 2025.
Yeah.
But yeah,
This is cool.
this
This
is
is
good.
really
This is good to
cool.
have. Yeah,
And they
this is
released
great.
this on 7. Okay, so 7/9 was that was like midweek.
Last
So we got
Wednesday.
like it shows here posted on July 10th. So that looks like the date was the 9th.
Yeah.
So it looks like they're doing every 7 days. So we should have one today, like Kane said.
Yeah. I wish they did at the beginning of the week so you could kind of get your positioning for the weeklies. That'd be cool. But
Yeah, right.
That'd be nice.
this is pretty cool. Yeah, I'm gonna use this.
So
Cool.
this is interesting. The range of responses, you can do up to 200% on this this reading because that's leverage long. You can do fully invested at 100, but you can do 200%, which would be leverage long. That'd be have we ever had readings in like the 120, 150, like positive or negative, or it probably stays between whatever 20 and 80 kind of Pareto's principle, or we get to 100.
Yeah, I've got to open up. So they give you that Excel file. You'll be able to see beyond 2024.
Yeah, I see like the one, this would have been in March of 2024, up to 104. Let's actually draw some correlations here. March 13th, 2024, we're 104.75. March 27th, 103.88. April 2024 was a 5 and 6% correction in the S&P and the NASDAQ.
Yep.
Good indication. Go to July 2024, 103.66. Middle of July, we topped out. We had that correction middle of July into August 7th.
Yeah.
Right. Or August 5th. August 5th was the bottom. So yeah, we just poked 99.3 on July 2nd. I think, yeah, something to watch. So it's almost like if this thing stretches over 100, we're typically seeing some short-term pullbacks from there.
Right.
Okay.
Yeah. Interesting.
And this is what they're actually doing. And it's not
Yeah,
their
of course.
sentiment.
Yeah, I know. That's what I'm saying. Like I take that over sentiment all day. So very
Yeah,
good.
so-
I'm gonna have that. I'm gonna take a look at those. I'm gonna do the Excel file because I've got enough memory for the last probably 15 years that I can be like, oh, okay, it's over 100. What happened shortly after that? And try to put some correlations together. That's awesome, Kane.
Yeah, this is really cool. And who reports on this? Just the
Members of the NAAIM. So there's basically, if you're a fund manager, you have the option to join this organization, and there's a lot of guys who are part of it, and they report.
Yeah, this is really cool. I mean, it's it's the same chart with the market right there.
Yeah, right.
Yeah, you can totally see the correlation, especially at the peaks and the bottoms.
Yeah. Interesting. Well, that's a good start for today. Let me go ahead. Where is my? Sorry, I'm just looking around here. I lost my little deck. Here it is. All right. Well, we already got into our opinions, but as it should be always said, this is our opinions, educational purposes only. Conduct your own research, seek your own advice or licensed financial advisor if necessary. All of the investments involve some form of risk. There's no guarantee you will be successful in making, saving, or investing money.
Just keep going, Alex. We're having a huge drop right now, dude. We just had a 30-point drop in the last 5 minutes on the
All right, no, is there
SPX.
any guarantee you won't experience any loss when investing? Always try to make more decisions, do your own research. I need to take like that auctioneering class.
That's right.
Yeah.
Very good.
Where's my
just a big candle. SPX. I've got all my my intraday stuff up. We just had a big fat drop by like 30 points. That's a big rip. So that's the intermediate support I talked about at 6240 breaking hard. Now we got room to run down to 6200.
Look at that.
Yeah. I mean, let me see what the VIX is doing, because if the VIX is snapping up, VIX just jumped up to 1845, fellas. So we're talking maybe some intraday move that now gets up into the 1+%, 18.45. So maybe like a 1.15 move on the day.
It looks like it's news driven. Trump likely to fire Powell soon, White House official says.
What?
Wow.
Can you even do that? Can you even do that?
Yeah. If that's it, then it'll bounce.
It's just an overreaction, dude. So stupid, man.
That's on the 3-minute right here. You can see that. Wow.
Like, what White House person has that authority to even say that? That's just a soundbite. That's so stupid.
Yeah.
Anyway,
look, especially since
Probably
he's
trying to
out
gauge
next year
market.
anyways.
He's
I
out in
mean,
May anyway. It's like, just let the
yeah.
guy serve his term. He's going to cut rates. It's like, shut up. Just let him do his thing. Replace him with, and again, a yes man isn't the answer. If you take away the Fed independence, a yes man is not the answer. So again, we think like all is like nobody's smarter than the markets, in my opinion. The markets will always be right. So if you think that a yes man in the Fed is going to be good for the economy or bad, like nobody knows. I think it's like the market's going to tell us. So, I mean, what I can say for this reaction is anybody surprised to see the market going down? I'm not. It's just how much further do they go down? How much faster they go down? And the VIX is literally jumping up. It's up 7% for the day. So VIX has spiked from 17 to 18.5 in the
Wow.
last like 10 minutes.
Yeah, I mean, not even in the last 10 minutes, man. I mean, we were looking at this maybe 4 or 5 minutes ago, and it's like
Yeah.
the candlestick was like tiny here. Oh, this is the
Yep.
monthly. Let me go to the daily. Yeah, look at that. That was crazy. Wow.
All right, boys. I might get a little courageous here. Let me see if I can get my intraday levels. I might look at something like I hate to do it, but I might be a little bit of a bottom picker today. But it's going to be based on if we get down to 60. I want to kind of pick one at like 6,200 because the market has bottomed there pretty
Yeah,
firmly.
I would say you see this here 6197,
Yep.
6200.
So I think I'm going to do like a 6,200 by 6,190 and see if I can get like a $4 or $5 fill on a credit spread, and just see if there's some reflex off of that today. Could be a terrible decision, but it's like if I get filled on like at least half the width of the spread, then
Yeah.
it's not awful, but we might not get down there. I'm just going to keep an eye on it.
Yeah.
So just don't do anything silly. Right now the premiums are maybe jumping. Could I sell above today's high at 62.61? Let me check SPX really quickly.
What did you say you were doing?
I'm looking at originally the rule of 16 in the VIX is you take the VIX number, divide by 16, that gives you roughly the expected move for the day. Like that's how much intraday volatility is kind of baked into the market. So now that we're having a big surge in VIX, it opens up the gates for maybe like a 1.15, 1.12 intraday move. So that puts me right around like 6,200, 6,190 would be like if I'm going to call a bottom today, that would be where I'm kind of looking to maybe scoop up a credit spread. So if I can do like, here's an example. I sell a 6,200 put.
Yeah.
I buy a 61.95. If I
Yeah.
can get filled at like 250 credit or 275 credit intraday, that's a great fill. It's very hard to get filled like half the width on a credit spread unless you're like at the money. So I'm kind of looking to play like the bottom and see if it bounces back up from there.
Yeah. So that's an interesting point. So just a tidbit for folks who do spreads. We're actually going to talk about how to before we get to your segment here today, Chris, about a little scanner I made just to find high premium in a low VIX environment. But
Love it.
basically on a credit spread, you want to get filled for at least half for credit spread. Now, if you play debit spread, you want to get filled for typically less than half, right?
I mean, it depends. It depends on the strategy. I mean, my rule of thumb is if I'm doing out of the money, I'm trying to do like a 1/3 width on a credit spread. So, example would be, let's say, I mean, easy. I'll trade the SPY. Okay. If I think the SPY is going to go up, if I did this like every week or every month, and I just did like maybe a 20 delta sell put, and I do SPY, I'll do maybe 5 wide. If I can get filled for like $1.65 or better, roughly those percentages and probabilities work out pretty nicely to have like a high probability profit. You're collecting 1/3 of the width. That's not bad. But if you're going at the money, then yeah, you're trying to get at least half of that credit spread. That's a pretty good fill.
Yeah.
So I feel like we need to go like a little bit deeper into, the benefits of like debits versus credits and what to pay. Because the nice part is either one, if you do a debit spread or do a credit spread, you can do like in the monies for like credit spreads in the monies, you get filled for a lot of credit. You just have a slightly lower probability of price covering your break even. But here's a good rule of thumb. In my opinion, debit spreads, I like to do debit spreads if I have more reward than risk. That's my preferred way to do a debit spread. If I'm going to do a debit spread, I want more reward than risk potential in the trade. If I do a credit spread, I want typically the higher probability, and as long as I collect at least 1/3 of the width or better, then I'm pretty happy with that setup. That's kind of my personal rule of thumb.
Because that gap between your fill and the total strike price width is like your profit potential, right?
Yeah.
Yeah.
Yep.
Well, we probably would need to go and show people like that with them on a drawing or something on the charts for people to understand that. But And we can get to that. Maybe actually, that'd be a good lesson for next week, maybe.
Yeah, I mean, I'm sure we've all done them in our respective classes. I just did a YouTube session like maybe a month ago that was just strictly buy calls versus a debit spread or credit spread, buy puts versus a debit spread, credit spread, and just trying to show people here's like the very simple math. Here's how you can remember this on your charts. Here's where you know you're making money or losing money. If you want me to share that, I can post that in here if that helps, just to give.
Yeah,
It's
why
like
don't we
90
give
minutes
everybody
long.
that, since we
All right,
are talking about it, and we'll, for everybody who comes to Profit Panel, we will do a lesson coming up here
sure,
about that. So
cool. All right, I'll find that video. Just give me
okay,
a couple
cool.
minutes.
Yeah. While you're doing that, let's go through stuff. So very interesting, and I know you were going to talk about this too, Chris, about the H20 chips with NVIDIA. ASML is a fab company. I think they're Dutch, but they're down pretty hard today. It's pretty interesting. So yeah, wow, look at that. Now, why are they down? Well, so we had good news yesterday with the Trump administration approved NVIDIA starting to sell H20 chips to China again. But ASML comes over here today in their earnings call and says, we don't really know if we'll grow in 2026. So a little bit of a mixed bag on the semiconductor, on the chip side of things. Obviously, that's going to be huge for NVIDIA, but it just begs the question. I don't know if I really believe this, but it is an interesting question. Like the NVIDIA has been just, I think the market's kind of just been going up on the back of NVIDIA, constantly posting, a couple $100 extra billion in surprise earnings revenue every single quarter. So eventually you would think you would reach a saturation point or at least a slowdown in that. I don't know. We'll see. It's just interesting to keep an eye on this, because again, I think chips over the last 2.5, 3 years have been really responsible, and especially with NVIDIA, of buoying the market, right?
Yeah.
Now look, nuclear is still cranking. I'm really bullish on nuclear. Oklo's in our long-term buy and hold portfolio from years ago. We got this one. Westinghouse plans to build, 10 large nuclear reactors in the U.S. Interim CEO told Trump. If you trade, anybody here in the audience, have they been trading tickers like Brookfield Energy Partners, right? And Brookfield is not only involved in nuclear, they're involved in hydro. You can see here. Google just dropped a ton of money investment to plug into Brookfield with their hydropower agreement. So all of these companies are looking for new energy sources to power AI. These data centers are super intensive in terms when it comes to energy. So Brookfield, I was looking at it, for buy and hold, I like it. There's not a lot of options chain on it, not a lot of options activity on it. But there are some other ones, SMR, Oklo, BWXT, Chris, Kane. I don't know if either of you trade, any of these three, or have positions, or even watch them really. But again, SMR. So SMR is New Scale. These are all involved in the small modular reactor space. You can see here, I like a potential entry. If we do break above this resistance line, I guess we sold off from the all-time highs on SMR, and they're a little cheaper than Oklo. So if you're going to go to Oklo, they're a little cheaper. But again, I belong to, like, there is some good, and honestly, Oklo might even be a better play if we can break above this short term back in basically late June resistance levels here. And then BWXT is another one. Actually, where I'm from, they're headquartered in Lynchburg, Virginia. They're a little not as sold off as much, but so these are all, I'm watching these for entries. And for Oklo, SMR, we traded I believe we traded SMR in one of my services. I forget which one, but Dave is saying AI is moving to Canada. Interesting. Which AI is that, Dave?
Is that when Canada becomes our 52nd state or territory?
Yeah, 51st.
Yeah.
It's either going to be Greenland or Canada. So yeah, nuclear again. Nuclear is on the watch list. In terms of themes, right? Nuclear, I don't think is slowing down. I think there's still plenty of upside on nuclear, because we're really in the beginning stages of this. In my opinion, we're really in the beginning stages of the whole nuclear renaissance. I mean, a lot of these, this stock prices has been, I would say, nothing's really too much has happened, but the deals are coming faster and faster. I think last week Microsoft, or 2 weeks ago, Microsoft announced a ton of new deals on the nuclear front. So just watch those. I am.
Yeah, I think nuclear is really interesting. Another name that is priced a little bit lower than even SMR is NNE, and it hasn't moved up as much. So you have room before you get to that breakout point as well. It's a little bit more similar to BWXT. Yeah.
This is right, nano nuclear.
Yeah, that's
Yeah,
right.
I like that. That's a little farther off of its all-time highs too, so it has some more room to
Right.
run if we do get a breakout. I mean, yeah, I would say probably just watching this, see it just to see, just to get the structure there. But yeah, hugging the 9. That's interesting. I'll add this to the watch list.
All right, guys, I'm gonna do some bottom picking today. I've got a 61.90 by 61.85 bull put spread on SPX for 275. Not filled. It's trading for 60 cents right now, so we have to go like pretty much get that thing at the money or in the money. It's hard to do that in a 0 DT environment, but I'm not playing any funny business here. If this VIX is going to spike up and go up 7, 8, 9, 10% for the day, I'm trying to play like maybe a 1.2 to 1.3% intraday move. I've got a nice gamma level also at 61.80 for the day, so see if we can get a bounce off that. So we'll see if it fills. It's hard to get those filled.
61.90 and what?
61.90 is my sell put, and a 61.85 is my buy put. I'm trying to get filled for 275, which basically means price has to fall to like 61.90, or I'm sorry, 61.85 for me to get filled on that trade.
That's yeah.
So like I said, I'm doing some bottom picking today, but I'm going to risk less. I'm going to risk less than what I can make on the trade if I'm right.
Nice. Yeah, you're going out. We'll see. We'll see.
Yeah. It might honestly, it's probably not going to get filled. But if we come down to 61.80 today, there's a chance it gets filled because it's only 11:30 this morning. So unless we're about to see some big nasty 2-3% move, but I mean the VIX would have to go absolutely crazy for that to happen, which it is kind of going crazy. VIX is already up 8%. So
that's 0. Is that weekly? 0?
I'm doing a 0 day. Yeah.
Yeah.
I'm literally calling like intraday lows.
Yeah, Ray. So that answers your question, my man.
Yep. So it's today's expiration. So pending. It may not fill, but if it fills, price is going to be down to about 61.90, 61.80 today, and I'm looking for a bounce off that.
Yeah.
So we'll see.
Cool. And then so another trend, right? Just to keep an eye on. So that there's big like the House bill, the crypto regulation bills going through the House. There was some talk yesterday they wouldn't pass because the House rejected them, and now it looks like they're saying that it will. So again, crypto, like just the thematic trading. Look at what's been pumping. One of those is nuclear, one of those is crypto, and it has been chips. So again, just watching Mara, MSTR, and IBIT. So just to see what they will react to, right? If we do have a little bit of, or if this House bill passes successfully, Mara, we're fairly significantly off at the top there, pumping a little bit today. So we'll see. Again, that's on the watch list, just waiting for that sort of a breakout opportunity on that one. MSTR still going good. Either of you guys trade any of these? IBIT, MSTR, Mara?
I'm in 2 of those 3. I did MARA a while back, but I'm in less of that now. I'm in MSTR a lot actually, IBIT a lot. Currently my portfolio, decent amount. I'm running with some profits. I'm up $75,000 in IBIT right now. And MSTR so far has actually turned into more of an income trade for me because I'm selling in the money covered calls and just collecting, 30-day income on those covers and rolls, I'm up 54,000 on MSTR. So it's not nothing. I've got some exposure, but IBIT is more of like my spot price on Bitcoin. MSTR is more of, it's crazy volatile. I trade a lot of collars, but my cost basis has gone down to like low 300 since I started participating. So now I'm like, selling 350s and 355s and 360s. I'm kind of rolling it up in strikes and rolling it out in time a little bit. But I'm not trying to get too fancy with it because it's a very volatile stock. I mean, I would say if MSTR hits the recent that like when we hit all-time highs on it. So when MSTR was just like pretty much a 3 times leveraged Bitcoin and we hit 540, if MSTR gets back to 540, I'm going to start winding down my position. I think that's a heck of a run.
Yeah.
I know that now there's like the treasury stuff and like the creative like financial engineering that Michael Saylor's doing with I don't know if it's like Strike or like MSTY. There's like 8 different things he's doing. So
Yeah.
but
All those things
it's
are
exposure.
pretty.
It's
One of those
exposure.
yield max. There's yield max funds.
Yeah. Well, those are pretty interesting because I have positions in MAR and MSTR. I am staying away from spot Bitcoin for now because I think the real money is going to be in those treasuries that Chris was just talking about.
Mm-hmm.
Earlier, we talked about if I'm a professional manager and I'm being forced into 40% fixed income, and all of my fixed income is this treasury stuff, this corporate paper that's only paying 4 or 5%. But then you got these MSTR guys coming out with fixed income paper that is yielding 10 to 17% because they're backed by crypto and they're over collateralized, unlike a lot of these other things, especially US treasuries. Then that is actually, if I'm looking at my absolute risk, if I forget all my finance 101 US Treasury is the risk-free rate type of lessons, and I actually evaluate the risk for myself, having that over collateralization in an asset actually goes a long way of taking away that risk. So if my fund is forcing me to go into fixed income and I can do a fixed income product that's coming out of something like MSTR, then I'm going to start moving money over there and just to capture some of that yield that I've been missing out on for the last several years. So I think you're going to start seeing institutional money flow into, if you haven't already, but more and more institutional money flow, because what has to happen is these guys, they come up with a product and there's not an unlimited supply of it because it has to be backed by Bitcoin or whatever other cryptos that they're backing it with. It has to be over collateralized. So they sell some product, then institutions buy some of the product. Now they've made some profits. They take those profits, they buy even more Bitcoin, and then they make even more product. And so they do have a production cycle. So it's not like they can just make it out of thin air and just say, hey, I'm going to sell 1 trillion of these. There is a cycle that they have to go through. And then as institutions pour more and more money into it, then they can make more and more of these products. So I think we're in a long term, at least for a couple of years, we're going to see an appetite for their products.
Interesting.
Yeah.
Very
It's I think so. Can I ask you, do you think that would pull away from like just straight up spot pricing and spot appreciation on Bitcoin?
No, but actually it would help for sure. But I think the growth will be faster in these individual stocks than because the flip side of that is also institutions, they have basically free reign under their SEC rules. They can buy these stocks because they've already been vetted by the SEC. They've already been registered. They're doing all their accounting. Right. They're already publicly traded. But if I go and I try to buy something like crypto, all of a sudden the SEC is all over me. Right. So